What's up, y'all? Let's talk about Netflix and let's see if it's a buy right now for the long term. The short answer is yes. Netflix is number one in their industry and they're best in class when it comes to streaming. And 7 out of 10 people have a Netflix account. Also, they have earnings tomorrow. So let's dive deep into the catalyst that can make the stock go up or make it go down. Netflix can still beat earnings and drop or miss and still rip, because the market only cares about a few future-looking catalysts. Today, I'm going to break down the exact numbers and headlines that usually move Netflix. Netflix reports Q4 2025 earnings on January 20th, 2026 after the close. The setup matters because investors are watching both the core business and the deal headlines around the Warner Brother Discovery deal. Catalyst number one is guidance, not the past quarter, but the next quarter. If revenue guidance come in stronger than expected, Netflix usually pops. If guidance is cautious, the stock can drop even on the beat. Catalyst number two is operating margins. Netflix has matured. The market wants to see profitability hold while they still scale into new things. Margin expansion equal bullish. Margin compression equal bearish. Catalyst number three is free cash flow. This is the real money the business throws off. Strong cash generation signals Netflix can fund content, buy back stock, and stay flexible, especially if the deal financing become a bigger topic. Catalyst number four, ad business momentum. Investors want proof that the ad tier is scaling, either through ad revenue momentum or strong ad tier adoption. If ads look like a real growth engine, Netflix gets re-rated higher. If ads sound slow or vague, you can see a sell-off. Catalyst number five, pricing power and engagement. Netflix isn't only judged by subscriber ads anymore. Investors listen for retention clues, engagement trends, and whether price increases sticks. Now, the wild card is Netflix have announced a agreement to acquire Warner Brothers assets after a separation structure with a headline enterprise value of around 82.7 billion. Now, the deal catalyst. This is financing changes. Deal headlines can move Netflix because investors immediately ask, how is it financed? There's reporting that Netflix may shift towards an all-cash offer. If the market thinks financing adds risk or leverage, that can pressure the stock. If financing look clean and manageable, it can lift sentiment and raise the stock. And the last catalyst is timeline and regulatory. Regulatory approval, shareholder vote, and any bidding drama will cause more uncertainty and cause more volatility into the stock. Now, if we look at Netflix stock, they are currently $88. Now, Netflix also had a 10-to-1 stock split. So before the stock split, Netflix right now would be $880. But after the stock split, they're currently now $88. Now, if we're looking at Netflix chart on a daily, they're also showing a head and shoulders pattern. I was already charting out, so let's look at some charting that I was already doing. Netflix is Netflix is currently showing a head and shoulders pattern. Now, we can come down, we can come down to this 4-hour order block right here. Let's go to the 4-hour. We could come down to this 4-hour order block that we established March 10th in 2025. That's when smart money stepped in and bought Netflix. So this money been sitting here. Now, if we get a catalyst that push Netflix higher, I see us getting, we can at least get to right here, to this $97 level. That'll complete the right shoulder. We'll probably do a buy side liquidity sweep, meaning Price will just peek his head right over this bearish order block, but it's still a come down and close within the bearish order block. That will complete the right shoulder. And the neckline is actually right here at $85. So if we complete the right shoulder and drop past $85, Netflix has a projected move all the way down to $40. Now we have a lot to do before we get all the way to $40. So let's break that down. If we don't complete this right shoulder and we just fall all the way through, our first level of defense is right here at this 87.15 level, which is just 4-hour order block. If this don't hold as support, we can go to this 1-hour order block. If that 4-hour order block don't hold, we can come to this. If that 4-hour order block don't hold, we can come to this 86.61 level, which is the 1-hour order block. Both of these are internal order blocks because they're lighter green. Now this 1-hour order block been here since, let's see, been here since April 4th, 2025. Now that's when smart money stepped in and bought Netflix at that price. If price don't hold there, we also have a level right here at the bottom of this order block at 85.42. If we get all the way down here at 85.42, we can also do a sell side liquidity sweep, meaning it's the opposite of the buy side. It's a sell side, meaning price will peak its head below this bullish order block and close within this bullish order block. But if we fall past this bullish order block and we wipe out these orders, we also have a daily bullish order block. We have a daily bullish order block right here at 84.50. Now you notice this is a darker green because this is a swing order block. This has been here since January 14th, 2025. So with all three, the 4-hour order block, the 1-hour order block, and the 1-day order block, they are all old smart money orders sitting here since early 2025. So these orders been sitting here a year already. So smart money wants Netflix at these prices. They don't want Netflix all the way up here. They want to get Netflix as cheap as possible. And how do we know that? Is because we see these order blocks sitting right here. This is smart money sitting here waiting to buy. Now, if this daily order block don't hold, we also have a few levels right here at 82.92. And if that don't hold, we also have the bottom of this order block, which is historical support. And if we can see, this actually held up. It got tested once, twice, and both times it popped back up. So worst case scenario, we could see Netflix coming down to this 82 level. But in the stock market, anything is possible. And that's why I have lower levels. Now, if this 82 level don't hold, we have 81.71. We got 80.68 right here. And we have the 78.94 level right here. If we also look at the VRVP, we got a lot of volume right here. We're currently right here. So it is right here. We have our next volume right here at 86. Then we have our daily bullish order block right here between 84 and 82. And if that don't hold, we got this next level right here at 79. And if that don't hold, we'll come down to this other daily order block at $76. Now, when you buy long term, you want to buy as low as possible in a good company. And if you can buy low, that's always the key. Buy low. This isn't a trade. This isn't a swing trade. This is buying shares for the long term. This is how you build wealth, one share at a time. Also, Netflix is, let's see how far they are from their all-time high. Netflix is currently 34% down from its all-time high. Now, that's a great discount when you talk about best in class in any industry. Whenever you can get a top dog in any industry that's 34% lower than where it was, you are getting a discount. I like Netflix at $88, and I like it even more at these lower levels. If I can get it at 87, 86, 85, even 79, I like Netflix at those prices. Currently, I'm buying shares of Netflix for my daughter's custodial account. So these $88 levels, I'm loving. I'm actually currently buying some shares right now. And if earnings come out and it's not favorable and the market doesn't like what Netflix is talking about and they push the price lower to these lower levels that I talked about, I'll be buying some more shares. Just because we in the head and shoulders pattern, it's showing the head and shoulders pattern, that don't mean we have to complete the head and shoulders. It can just completely fall and hit these levels. As we can see, we actually use previous day low as support. We dropped past previous week low. So Netflix is falling because of the deal between Warner Brother. Like I said, investors want to see where the money coming from. Is it going to be putting Netflix into more debt? Is it manageable debt? Can they handle it? It's a lot of things coming behind this deal. But if you're a long-term investor, when you hear about Netflix buying Warner Brother, that's positive. That's more content. Warner Brother have great movies, great series, great TV shows that'll be a part of the Netflix catalog. Netflix is getting stronger, it's getting better content, it's putting movies out. Certain movies are hitting the big screen. This is a good deal if you're a long-term investor. The short-term turmoil really doesn't matter when you're buying long-term because the $88 price that Netflix is now, you got to think, is it going to be this in 2 to 5 years? I doubt it. So when you see things in the news about, oh, Netflix is down because of this, that's when you put your investor mindset on and be like, okay, this is the time to buy. This is not financial advice. I'm only telling you what I'm doing. This is a time to buy a great company at a great discount. We already see that they're already 34% down from their all-time highs. Netflix will rise up again and get to these levels. Whenever a stock falls from a level, it will retrace and go back to test that level again. It's just a matter of time. As long as Netflix is this low, that's giving us opportunity to buy more shares and add to our wealth and add to our share count. Long as Netflix is under $100, it's a deal. Under 90, it's a deal. Under 80, it's a deal. Even if it get to $100, it's still a deal. This is Netflix we're talking about. Like I said, 7 out of 10 people have a Netflix account. If y'all like this breakdown on Netflix, like, comment, and subscribe, and y'all have a good one. Peace out.